I'm joined with Rhylin Bailie from Equinox Gold. Rhylin, thanks for joining us.
Thanks for having me.
So something I like to ask our guests this week is, you're going around from meeting to meeting, you're having conversations, I'm sure, with some colleagues outside of the meetings, or even the investors you're talking to, other companies you're talking to. What's the sentiment been like? Like from our perspective, we're hitting all-time highs in the price of gold as of this morning, and it doesn't seem like there's that much excitement for what you would expect.
Well, that's exactly my impression too. It seems a little bit subdued. I think because this time last year, gold was what, $300-400 less than it is? And the share prices are basically at the same place. So it's a bit frustrating. I'm an investor relations professional. It's a bit frustrating to come back and go, we've achieved so much progress, but our share price hasn't moved a lot. And so I think it's a little bit subdued from that perspective, but also there's this undercurrent of excitement because gold prices are so strong, and the global economics point to gold prices going up. So I think everybody's just sort of, hopefully it'll be soon, hopefully this time next year we'll have seen a move in the equities.
So you guys are one of the, we'll say, larger gold companies that are here. Mm-hmm. You're the largest by market cap that we've talked to this week. For people in our audience who are new to the Equinox story, can you just give us a high-level overview of the company?
Sure. We started it just about, 6.5 years ago from a single asset developer. Now we've had a lot of growth through M&A by building 4 mines. Now we've got 8 producing mines in the Americas, so 1 in Ontario that we just put into production in May, 2 in California, 1 in Mexico, and 4 in Brazil. So we'll produce about 700,000 ounces of gold this year. And with the projects that are already in our portfolio, we hope to be over 1 million ounces in the next few years.
So the big news that I think everybody's talking about here with you guys is that Greenstone Gold Mine. How's that going? What can you tell us about?
Oh, it's fantastic. It was such an important achievement for us. So this time last year, we were still in construction at Greenstone. We told everybody that we would be pouring gold in the first half of 2024, and we poured gold on May 22nd. So that was a check mark, achieved that. Now it's ramping up to commercial production. So we were over 60% throughput. Average during August, we've been over 75%. Many days, we've been over 75% mining rates. So our objective is to be commercial, sometime probably early Q4, closer to 90% by the end of the year, and then full capacity next year. So this year, with a half year of production, we'll get about 190,000 ounces of gold. But next year, with a full year, we'll have closer to 400,000 ounces. So it's really a transformative asset for us. We only owned 60% earlier this year. In May, we acquired the extra 40%. So we've consolidated 100% ownership into our portfolio, and it will be by far our largest and lowest cost producer.
So what's the next asset you guys are focusing on moving forward, or is Greenstone still sort of the concern?
Yeah, Greenstone's still the focus because we do need to ramp up to capacity, and it will be, like I said, such a transformative asset for us because it's our largest producer, it's our lowest cost producer, so it's going to reduce our consolidated costs across the board. We expect all-in sustaining costs there to be less than $950 per ounce. So that's a really important asset for us. We are looking at 2 other expansion projects, one in California that will increase production there from sort of 15,000 ounces a year to 220,000 ounces a year. We're hoping to do a big expansion at our Los Filos mine in Mexico that will take production from 165 this year to sort of 260 to 300,000 ounces a year when that's wrapped up. But those are both sort of a few years down the road. We still need to do a bit of work to get there. So really all the questions that we've had at the conference this year have been, how's Greenstone going? Congratulations, how's Greenstone going? And looking forward to seeing it ramped up to capacity.
So what does that ramp up look like for Greenstone?
It's just gradual. You just have to keep getting to know the mill. It's a big 27,000 ton per day mill. Every mill sort of has its own personality. So you just have to every day hope to be adding a bit to the capacity, watching your recoveries, making sure everything's working appropriately, tweak a few things here and there as you need to, and then just gradually ramp up till you've achieved full capacity. There's no magic to it. It's just sort of, baby steps every day, hoping that it's constantly trending in the right direction.
What does the investor base look like? I see Ross Beattie is a large investor. Are there any other institutional funds you can speak to?
Oh yeah, we've got about 65% institutional ownership, a lot of high net worth, and then quite a strong retail following in the States. Ross Beattie is our largest individual shareholder. He's also our chairman. So he joined the company when we formed it, actually, at the very, very end of 2017. We did a 3-way merger, and Ross joined us as our chairman and largest shareholder, and that's when we rebranded as Equinox Gold. And he's the one that gave us the vision of 1 million ounces a year. So that's what we're moving toward. There's no magic to that 1 million ounce number. It just sort of demonstrates scale, liquidity, lots of cash flow. You get the larger institutions in when you're at that size. So that's that's what we're moving toward. But it's just a figurehead number, I guess.
How active, and I don't know how comfortable you are to speaking to this, but I'm going to ask it anyways. How active are the M&A talks from the conversations? Look, we don't even have to talk about Equinox. I'm sure you're talking to other colleagues at other companies. Do you get a sense that the M&A talk is pretty heavy here?
Well, for sure. I mean, that's why a lot of people come here, is because you do have the smaller companies, and you need to start thinking about your pipeline, right? So you've got your growth built in, but you need to be able to sustain that growth and keep replacing your reserves. So when we come here, we run two completely separate calendars. I run the investor relations calendar, and then our VP of corporate development runs a corp dev calendar. And so he's had just as many meetings as I had. It doesn't mean that you're actively acquiring. We're not. Like, our primary M&A target was to acquire the extra 40% of Greenstone. We did that in May. Now our primary capital allocation priority is paying down debt. So we would like to funnel the Greenstone cash flow, and from our operating mines with gold prices at $2,500, cash flow goes up, which is wonderful. Our priority now is to put that into paying down our debt. But you always sort of keep your ear to the ground, because if something amazing comes along, you want to be able to at least take a look at it and see if it's something that would snap nicely into the portfolio.
Now, maybe let me try to rephrase that question a little differently. Do you get the sense that the M&A activity conversations are picking up this year as opposed to, say, last year or the year before?
I don't run the corp dev calendar, so I can't speak to that personally. I see, just conversations I have over lunch and dinner. I don't think so. I mean, people are always looking at M&A. You're always looking for either a potential target that you can bring into the company, or a potential buyer for a smaller asset that you might want to divest. Like, we have sold 3 of our smaller mines along the way as part of our growth. We bought, bigger assets like Greenstone, and we also sold some of the smaller assets, because you're always trying to optimize the portfolio. So I think the M&A discussions go both ways. It's a very transactional industry, as you know. Consolidation is quite important. Having, a bigger company, like I said, with the bigger size, the scale, the cash flow, all of those things is important. It's really hard as a small single asset company to really be able to track the investor base that you're looking for. So I've been coming to this conference since the second year it was started. M&A has always been one of the primary topics here.
Well, Rhylin, thanks very much for sitting down and chatting with us. I think that you guys are probably one of those names that the investors that in our audience that are kind of going down the list of where they think capital is going to flow to. You guys are obviously one of those names that I think is more attractive for those investors going through that sort of chain of where capital is likely to flow. So we really appreciate you hopping on here and chatting with us.
Thanks for the opportunity.